As Russia's economy ministry warns the country risks sliding into recession, how to avoid that is a main focus of a major investment forum in Moscow. Growth in the first quarter was 1%, way down on the 5% forecast. A weak Europe is cutting back on energy use, highlighting a lack of the promised diversification of Russia's economy. When commodity prices start going down, especially oil and gas prices, it's obvious that all these issues impact the Russian economy. And that's when the structural problems and the lack of diversification become more evident. Europe accounts for half Russia's foreign trade, and half of its budget revenues still come from oil and gas sales. President Putin this week ordered ministers and advisors to come up with solutions. The joint head of Sberbank's investment department welcomed that, telling us establishing the right diagnosis is very important, and it's reassuring for investors when the government has a sound assessment of the situation in the country and takes necessary steps to change it. I think the alarm call we saw in the first quarter makes this a good time to take countermeasures. Prime Minister Medvedev says the government will consider stimulus to avert recession. But his first deputy and the incoming head of Russia's central bank have warned against dangerous, hasty moves to boost growth by increasing government spending. Our correspondent in Moscow says so Russia is still a huge market rich in natural resources. But high commodity prices can't mask the structural problems of the economy anymore, and it's starting to have an impact on investors' priorities.
Наталья Маршалкович из Москвы для Euronews.